Hey, what's up, y'all? It's Harpreet Gill coming to you with Money Talks. Today's episode is all about taxes, and we know that this is a topic that some of us dread, but it's definitely something that we need to get more familiar with. Doesn't matter what we do, we get taxed. That is a guarantee. Death and taxes are definitely one of the two guarantees in life. So it's important that we start familiarizing ourselves with an area that is so unfamiliar and just so taboo. But it's super important to get educated. Financial literacy is key, and today I have a special guest, Camille Smith, who is an accountant who knows a lot about taxes, a lot more than I do for sure. She is somebody I work closely with. I refer a lot of my clients to her, and she has all the latest and greatest inside news that you need to help you with your personal finances. So I'm super excited to bring her today. But before we get started, don't forget to hit that like button and click that subscribe button so you can get your information on a weekly basis so you can be on top of your financial literacy. Welcome to the Money Talks Decoding Finance YouTube channel, where it's all about destigmatizing the conversation around money and building wealth. Allow me to bring you Money Talks every Sundays. Thank you so much, Camille, for being here with me today to talk about a topic that everybody hates, but everybody needs to know about. Yes. Taxes.
Indeed.
But you know what's so crazy? The more I've actually gotten more financially literate,
yes,
I like talking about taxes now.
Really?
Yes. Because now I know how to navigate a little bit more around them, whereas before it was just like, oh, the government's always trying to take money from my pocket.
That is
now
true.
It's like, how am I going to take money from their pocket?
Which is true. A lot of people, they get very wary when they talk about taxes, but I'm like, guys, at the end of the day, there's two things you're going to guarantee. Mm-hmm. Death and taxes. Mm-hmm. So you got to make sure that you properly prepare yourself for taxes.
That's why I had to wear this shirt. I'm like, we earn it, they tax it. Mm-hmm. We spend it, they tax it. Yeah. We save it, they tax it. And when we die, they also tax it.
All right. Exactly.
But before thank you. But before we get into it, I want you to let us know who you are. Who is Camille? How did you end up doing what you're doing right now?
Well, my name is Camille Smith. I work with, this is my business. This is my business, Fitness IQ Services. So I consider myself a personal financial trainer that helps people become financially fit.
Nice.
And then in a way, I do bookkeeping, I do taxes. I also help people change their mindset when it comes to budgeting and savings.
Love it.
Because eventually, once they get the habit of saving, they get to invest.
Yes.
And create general wealth and stuff.
Yes, absolutely. Mm-hmm. I always tell people that health and wealth are heavily twined with one another.
Exactly.
If we're not healthy, we're not thinking about building wealth. In fact, it's draining away our pockets. Mm-hmm. So I'm so glad that you combine those two industries together and doing some amazing things.
I try. I actually gotta thank my family because growing up, my parents were born in Jamaica. Right. But I was born and raised here. And basically, growing up as I'll say Canadian Jamaican today. Usually I say Jamaican Canadian. But growing up, they actually had their own business. So ideally, it's in my blood that I would have my own business. Right. And my mom went to school post-secondary for accounting. Okay. And my aunt that passed away this year, she was an accountant. No worries. Big up Auntie Cass. Yes. She was a CPA. So certified public accountant. Mm-hmm. So I was like, this is what I want to do. So I went to Ryerson for B-Commerce of accounting. And that's when I took a course in auditing. And I was like, you know what? Accounting is not really for me. I'm going to switch to finance because that's what I was actually minoring in. Okay. So I switched to finance, actually took a personal finance course. And I actually loved it. I actually did a comprehensive financial plan. Right. Spent nights and everything doing it. And I'm like, okay, I know this is crazy, but I actually love this and I want to keep doing this. Right. So everyone's like, are you sure? I'm like, yeah, this is what I want to do. passed university, went to Korea for about 2 years.
Okay.
Taught English there, and I decided, like, I realized how much I like teaching people.
Right.
Not much English,
right.
But when I realized, I'm like, okay, I get the big joy of teaching others, so why not come back and do personal finance?
Right.
And this is when I made Fitness IQ.
Nice.
So that's the story of why
okay.
I do what I do.
I love it. And I'm so glad that you touched on the fact that, you know, you had family members who were in the industry, because I always preach to people how important it is for us to see representation in areas that we normally don't see, right? Like, I never in a million years thought that I'd do anything with finances. You know, never did I ever meet anybody who's a financial advisor.
Yeah.
And so that wasn't even in my scope of thinking, right? Yeah. And then, you know, everybody around me growing up was a social worker or a youth worker, and that's what I gravitated to. And I was like, I like helping people, and I have a great time with these mentors who have been mentoring me. So I want to do the same thing. But then, you know, now when I look at some of the young folks now, so many of them are wanting to get into social work and youth work, and I'm like, guys, run for your life, run.
Oh man, I can imagine. Yeah, it's with accounting. There's just so many factors, or finance. There's just so many factors that we can build on that.
Right.
That's why when it comes to like financial literacy, especially this month, it's great to push it and also teach people about different streams of income. Right. Which is obviously, you know, the earned income, the dividends income, the rental income, what's another one? Capital gains, profit. And those are actually important to know when it comes to your taxes.
Absolutely.
Because, yeah.
And talking about taxes, we're going to get right into it. Now, I want you to kind of elaborate on the different ways that Canadians can get taxed. Okay.
So basically, in a sense, when you think about it, we have two different tax levels, in a sense. There's federal and there's provincial.
Right.
To make it very, very simple, I'm going to only talk about federal because everyone in Canada has to pay that. Depending on if you're in Ontario, Montreal, Vancouver, it's different ones.
Right.
But I focus only on Ontario.
Right.
But for federal, there are 5 tiers. There's if you're making $48,000 or less,
right,
you're in the first tier, so that's 15%. And I'm going to say approximately, because it's not the exact number, but I just got to make sure, right, approximately. So 48 or less, you're in the 15%. If you're making between 48 to 95,
right,
you're at 20.5. If you're making 95 to 150, you're up a little to 26%.
Right.
And then we got our folks that are 150 to 210,000.
Yep.
They're in the marginal of 29%.
Right.
And then we got those heavy hitters. We got those 210,000 and over, they're in the 33.
Right.
However, this is not what they're actually paying in their taxes because it's progressive. Because it's progressive tax, it's a layer of each tier that you're in. So if you're making that 150,000, you're gonna have an average tax from the first tier, the second tier, and the third tier. So you got to be mindful about that.
Yeah. Basically,
the more money you make, the more tax you pay.
Right.
But there are ways to reduce your taxable income.
Yes,
in a sense.
Absolutely. Yeah. And I'm so glad you mentioned that because I tell people all the time, you know, that working multiple jobs sometimes is not the solution.
It's not.
It's actually more detrimental.
It is.
I remember when I first came out of university and I wanted to build up my down payment.
Yeah.
And I started thinking, okay, how many jobs can I pick up? Where can I pick up these side hustles and things like that? Yeah. And I was like, wait, I'm gonna have to pay taxes.
Yeah.
Didn't think about it right initially, but as you processed it.
Yeah.
And I was like, okay, well, how am I going to pick up jobs that's going to pay me cash? Because I'm not trying to pay back no taxes like this, right?
Oh, man.
So it was a different process, right? And of course, when you get paid cash, there's also other issues like if you get hurt on the job, that's your problem.
Exactly.
You know, and sometimes they're going to lowball your payments depending on what it is that you do. But I think sometimes when you know your value, know your worth, you can kind of, you know, demand eventually what you're worth, even when you're paying cash, getting paid cash.
Absolutely. And I love how you said that when it comes to having so many jobs, you're actually, you're not benefiting because as much people hate, they're like, yo, why do they keep giving tax credits to the businesses? What about us people? Ideally, businesses are actually helping the economy give jobs.
Right.
If you're an employer, you're going to be paying most of the tax.
Right.
If you're now thinking of a different avenue, in a sense, like especially the income streams that I mentioned, now if you take into consideration of investment income, you're actually not paying as much as if you were to work. So ideally, if you want to invest and then get money from that investment income, or the capital gains. The capital gains, you're only paying half of what you earned from the capital gains. And it's actually the least income tax that you're paying. So you want to take like, I could be having this money from the employment, and then I have investment income, but it's not paying as much tax. Or you can even defer and put it into your Rrsps. I know we're going to talk about that soon. But there's just so many strategies that you can do, but you have to take the time to see what's going to work for you. If you don't plan ahead, it's not going to work out. You're just going to pay more tax. You're going to be frustrated.
Absolutely. You're going to be frustrated. You're deteriorating your body. Like there's just so many things happening.
You don't want to get mashed up.
But this is why it's so important for us to get financially educated because there are so many loopholes in the system. And for every individual, it's going to look different depending on what your goals are, what you're trying to accomplish. And that's why I always urge people to, you know, sit down with a professional like myself or you who can help you and guide you to where you need to be. You know, just like when we go and try to get fit. We go to a personal trainer. We need mentors in our finances as well, right? So what are some ways that somebody can reduce their taxes?
Reduce their taxes? Okay. So we had to keep in mind of the 5 tiers that I mentioned before. To be able to reduce your taxable income. So it's not the gross income. So every time people are like, yeah, I made 100,000. That's not how much you make, or that's not how much you actually receive. So you gotta think there's tax credits that are refundable and non-refundable, and there's tax deductibles. I'm just gonna mention a couple because there's so many. So if you think of donations, if you think of medical expenses, if you actually think of tuition, and I know there's some folks that their parents take that tuition. You guys wanna, if your parents pay for your tuition, fine, give it to them. But if you actually pay for your tuition, defer that money until you actually making big bucks, because you don't have to use it now and cash out and make all that money. No, wait till you actually are working and you're able to reduce the taxes. Because trust me, once you finish school, it's a done deal.
And just to kind of elaborate on that for people who don't really comprehend what that means, right? Really meaning that to push your tax credit later on when you start earning more income, because if you're a student making $15,000 a year, you're really not paying much taxes. So why would you get excited about something on a short-term goal? And I think that's what's important for us to realize too, is that the forward thinking, right? Because exactly, because we think about instant gratification, and sometimes that instant gratification ends up costing us a lot more in the long run. So if you can keep deferring that for the next 3, 4, 5 years, depending on when your income increases, now it's a benefit for you to take that, okay, I paid tuition back in 2015, and now I need you to actually use it to reduce my taxes in 2020.
I believe So I had my tax credits. So I graduated 2011.
Right.
The last time I used it was when I came back from Korea, like 2015.
Right.
I pushed that back. I was like, nope. I'm gonna make sure I get. I'm gonna utilize the tax credits that I have.
Right.
And also other deductions is union dues from your employer, and also consider that RSP contributions. You want to take in what your employer gives you, because you're actually getting free money.
Right.
And also the other one that a lot of people want to always discuss is the Rrsps, which is the Registered Retirement Savings Plan.
Yeah.
That is a tool for you to use. In my opinion, it's a great tool to use to lower your tax bracket,
right,
to go to a lower tax bracket. I feel like if you're making let's say 50,000 and below, it's better to actually contribute to your tax-free savings instead of your RSPs, in my opinion.
Right.
Maybe there's others that will say differently, but I think that's more wise. And even though your RSPs, you are able to build on that contribution room.
Right.
So keep making the money, make that earned money, because it's 18% of your earned income from the previous year.
Yes.
So you want to take a look at your notice of assessment.
Right.
Or just go on CRA online to check how much room you have, because that's money that you can actually invest in for your retirement in the long run.
Exactly. And I know that a lot of times we're going to talk a little bit more about RSPs in a little bit, but I tell people all the time, same thing. You know, if you're making less than, $45,000 to $50,000 a year, honestly, there's other ways to invest it.
Exactly.
Because there are consequences if you need to pull that money out. There are penalties, and those penalties are they're pretty penny.
Yes, I've known people that taken out earlier, and it's they're taxed like crazy.
Right.
So it's beneficial. The only time it's wise to use your RSPs to withdraw is when you're purchasing a new house or going back to school.
Right.
So keep those in mind.
Right.
Also, when it comes to a business,
right,
because I know I was talking mostly personal, but when a business, you want to think of your operating expenses. And that could be almost anything when you have your own business. So it could be advertising. It could be your phone. It could be your internet. It could be your rent. It could be meals and entertainment, but only half of it. But don't try to fool the system.
Yeah,
because you have to keep your receipts and stuff for 7 years.
Right.
To just keep track.
Right.
So don't try to fool the system. Because when you mess with the CRA,
yeah,
no sir.
Yes, no, the CRA don't play.
Exactly.
So you want to be very, very careful. But this is why, I always urge people, change your literacy and change your life.
Exactly.
Because it makes a huge difference on how you plan. When you don't know the rules of the game, you're playing blindly. It's kind of like playing Monopoly, and all your goal is to roll that dice and move around the board. But then you find yourself in jail and paying the banker and not buying assets. But somebody who understands the game, they're going in there with intention and purpose.
Exactly.
They know what they're trying to get out of it, right? Because I always tell people that the system is designed to do exactly what it's doing right now. It was intended for this. So it's not it's not a broken system. Exactly. It's doing exactly what it was intended, right? And I always say that the people who are wealthy are operating in the same system. They're not operating in a brand new system. They just understand the loopholes and the game, and they play it much better than we do. Yeah. We are those Monopoly players who are rolling the dice and hoping that, destiny is going to take us where it needs to, and we good.
No, you got to get that park place.
And just kind of emphasizing in terms of business taxes. Yes. That's something I tell my clients all the time is guys, think about starting a small part-time side hustle business. Yeah. Doesn't have to be full blown right now, work yourself up to that point. But business is one of the greatest ways to write off taxes. everything in this office right now is a tax write-off for me,
Right.
And it took a while for me to even start thinking that way, because I come from a family where it's like, hold your dollar, hold your dollar, hold your dollar. And now that I'm a business owner, I'm like, oh my God, what do I need to spend money on? It needs to be something that's going to be an investment, but also a tax return, right?
Exactly.
So right now, this is, you might think of it as stuff, but it's an investment for my business.
Exactly.
But then also I'm getting that tax return, because when we're an employee, the money is taking a piece of the pie before we even see it.
Yes.
Right? And then you go back out, you spend money and they tax it, right? And then you save it and they tax it. Yeah. But as a business owner, I get my money first and I go out there in the world. Yes, I spend money on stuff, but I keep those receipts. Like, I love receipts. Please. I never thought I would love receipts the way I love receipts now. Anytime I'm like, can I get a receipt, please? Receipt? Exactly. Can I get,
But you also want to be mindful, like the folks that they're actually like looking for a home,
right?
Especially if you only have a business. The mortgage companies actually look at how much money you make. So if you're making 100,000, but you're spending 50,000, they're only going to see 50,000. They're like, so how are you going to be able to afford this house?
Right.
So you want to be mindful, like, yes, it's great to have the receipts and show, but you want to think about property and stuff. Always want to think forward and stuff.
Exactly. No, for sure. Definitely want to think about that, because I think when we're in that wealth building phase, there's like that gray area, You don't want to spend too much, but you need to spend some to reduce those taxes.
Correct.
But once you build up your business, 5% on $50,000 is a lot different than 5% on $250,000 to $500,000, right? So it looks very different on paper.
Yes.
But the goal is obviously to build our businesses to the point where we become because $250,000 in a business, is nothing. That is not really worth anything. To the point where we are building ourselves to be $1 million businesses plus, then, if you have a place that you're renting for, I don't know, $10,000 a month, in hindsight, when you take a look at what you're earning, you need more expenses. Right. Exactly. So at that point, it makes sense to have that. But when you're in the building phases, there's a lot of gray area, and we need to be mindful of that. And that's why it's so important to reach out to a professional who actually knows what they're talking about, so they can help you in your personal finances, because there's no cookie cutter solutions. Yeah. Right. True. Everybody has different scenarios. And you need to really sit down. And if you have an advisor that hasn't sat down with you, educated you, and really dissected where you are in your personal finances, I'm telling you right now, there's a problem. There's a huge problem. Because how can I give you advice when I have no idea where you're at? Exactly. And that mind baffles me when I hear people say to me, like, I've never heard of a financial needs analysis. No one has asked me about, budgeting. All they care about is, okay, let's open up some insurance, let's open up some investments. And it's like, you don't even understand the full scope of this individual's situation. So how could you give advice?
Exactly. And it works the same way with the tax specialists, because in order for us to get the best value of what you want in return, we had to know everything. Right. Like, I have a list of things that I need from people, and there's times when they forget, and I'm like, it's okay. Just here's the list again, and just review it so we can plan accordingly. Because I don't want, in a sense, if you are able to plan accordingly, you'll be able to have everything that I need in one take and stuff. So it's always good to make sure the person has a checklist. Okay. And everything. Yeah.
Very nice. So I wanted to ask this question because I know this is, tickling a lot of people right now.
I can imagine which one it is.
We are going through some crazy times right now. 2020 has been an interesting year, to say the least. And I remember when they first introduced Rrsp. And I'm glad, obviously, that the government is providing some sort of assistance for people to, at least put food on the table and have a roof over their head. Yes. But I also have seen the other end of the spectrum where people are like, well, Rrsp money, let's get this, let's spend it.
On it.
Yeah. And so what kind of tax impacts will there be when in 2021 when we're filing for our taxes for those who are receiving Rrsp funds?
So let me tell you this. 2021 is going to be very interesting for the tax preparers or accountants or specialists.
Right.
First things first, the Rrsp payments are taxable income. It's similar to EI.
Right.
The only difference is EI, you get taxed. Rrsp, you're not getting taxed. So most people are going to be paying tax. Sadly, most people are going to be paying tax.
And will that tax be reflected on your tax bracket as well?
Correct. Yes.
Okay.
So ideally, with the same 5 tiers,
right.
If you, depending on how much you made at the end of this year, you're going to be taxed, preferably like your marginal tax will be on those tiers. So if you were making 48,000, ideally that money that you're receiving, you'd want to hold back 15%, just to be on the safe side. Or if you're in the other tiers, you want to go according to the marginal tax.
Right.
But a lot of people aren't obviously able to do that. So you're going to be prepared to pay tax. Or if you have tax deductibles, as before, you'll be able to offset what's happening. Or if you're lucky enough to get another job before the year ends.
So you have something to use to pay the taxes.
Exactly. And also the people that were fortunate enough to receive, to get back their job, just hold back a little or start saving because you're going to be paying.
Yeah.
It's sad,
right.
and it's annoying, but at the same time, these taxes that you're going to be paying back is going to help the economy. It's going to help the hospitals, it's going to help the schools, it's going to help the programs that we have, and it's going to help us in a situation like this again. These are the money that we're getting is from taxpayers. So you got to thank everyone that that you know helps out and stuff. And you don't want to be that person like, oh man, I'm not going to do my taxes. If you owe, they're going to put interest on you.
Right.
And that's the difference with owing and getting a refund.
Right.
You actually, ideally, yes, more money, more taxes.
Yeah.
But if you're getting a refund, that means the government had your money.
They overtaxed you.
They had money, and they're like, oh, sorry, here, take it back. But, whoa, you could have built interest on that money that they were holding on.
But they didn't. They're not giving it back to you with the interest.
Exactly.
Right.
So, but when you owe them, and if you're late, they're going to add interest on that. So you want to be mindful about that.
Yes. And that's exactly what I was going to say. A lot of times people don't realize, like, if you don't have the money to pay up front, guess what? You'll be paying in payments, but those payments come with interest.
Exactly.
And this is why it's so easy to go in this downward spiral where, you know, one crisis ends up to multiple crises. And I always tell people that we can't wait for a disaster to happen for us to plan. That defeats the purpose of planning.
Yes.
We have to be able to foresee things that can possibly happen. So we put measures into place so that it doesn't end up taking such a crazy detrimental hit on us, right? Exactly. And so, because think about it, if I remember in March, people were scared. They're like, how are we going to make it through by April? I've seen Amazon packages like at people's doorsteps every day. And I see people online shopping. No, this is obviously just my observation. And based on like even my clients, I'm like, guys, how are we spending $800 a month on Uber Eats? Like we're not working. It doesn't make any sense.
It doesn't make sense.
So when we don't have those monies to pay our taxes, you know, during tax season, then it just keeps on creating this crazy cycle. And we had an episode on debt already, and my gosh, my gosh, right?
I can imagine.
People don't understand how interest works, and it's crazy because anything that we get that we quote unquote think is free comes with a price, and it's always with a major price.
And I just want to like address it big time. This is not taxed, so you're gonna don't be like, I don't care, you know. They have it taken care of. They don't. So you gotta. It's like having basically the Rrsp is like having a business.
Right.
It's ideal to hold 30% of your money that you receive in a business just in case of the taxes that you have, because you're basically paying everything. You're paying CPP, EI, and all those things.
Yeah.
So treat Rrsp like you have a business.
Right.
And save. I know it's hard.
I know.
But just plan.
Yeah.
Just plan accordingly.
No, for sure.
Don't splurge.
Absolutely.
Yeah.
I know we talked about this a little bit, but I want to kind of dive into a little bit more. But who should really contribute to an RRSP?
Okay. So yeah, we did talk about that. Basically, I'll just do a recap. Whoever is making more than $50,000 should most likely be contributing to their RSPs.
Right.
And that's because it's just like it's a different tool on saving on the taxable income. You just want to lower yourself to another bracket.
Right.
And it's a tax deferral. Other like tax-free saving is just another tax saving strategy. But there's also Rrsps, RDSPs, and such things like that. But those are the tax deferral ones.
Right.
So you wanna, but if you're making $50,000, focus more on things that make sense in your world.
Right.
Save with the tax-free savings, and then you'll be able to utilize that. Or if you're making a lot, save on the Rrsps. If you have too much still, then you can go to the tax-free savings.
Right.
Because it only makes sense.
Right.
A lot of people just want to save their money. They want to keep as much money as possible.
Yeah.
And that's fair.
Yeah. And I just wanted to emphasize too that it's so important to kind of plan these things at the beginning of the year, as opposed to waiting till November, December and thinking, oh my gosh, how much can I put into my RSP to reduce my taxes? Because when you know, okay, you know what, I want to save, let's say $5,000 on taxes this year, I know exactly what I got to do to be able to do that. Especially when you talk to an advisor, when you talk to an accountant, we can give you professional advice on exactly what you need to do. And it's so important, as we talked about already, planning, because, you know, when it comes to RSPs, once you put your money inside there, it's locked.
It's locked.
And you want to take those out. Like I had a client tell me the other day, she wants to take out her pension money for 1 month's worth of rent. And I'm just like, sis, I would not advise that, you know? And so like when we don't understand all the intricacies to the system ends up using us as opposed to we using them. So that's why it's important to plan before time. Forget about whether or not you're where you need to be, because the planning part will help you determine how you need to get to where you need to be. Because the worst thing is finding out after the fact, thinking that you were doing something right, and then realizing a year, 2, 3, 4 years later that you've been doing it all the incorrect ways, and you could have been saving a lot more money, investing a lot more money, because we know when it comes to money, time is your greatest ally, or it could be your worst enemy. So if you think 2 years is not a lot of time, in the money world, it's a whole lot of time, and it can do a whole lot for you.
It is. And I just want to touch a little bit on the RSPs. The greatest thing about it is that you have until March 1st of the next year. So if you're not quite sure during November, December, good thing you can, get that slip at work. You're able to, you're like, okay, type of things. All right, I still have 3 more months, or let's say 2.5 to be safe, to strategize about your RSPs. So keep that in mind too.
Right.
And also, if you have a program, you can actually see how much RSPs to actually put in.
Yes.
To just balance it out.
Love it.
Yeah.
So this next question that I want to ask is so important, because so many people are really starting to think about business and starting their own sole proprietorship.
Yes.
But we don't understand the tax system. So I want you to touch on what are some items that sole proprietors should prepare and keep track of during the year, so when it comes to tax time, you pretty much have everything in order and you're good to go. But I think a lot of us, really don't think about these things.
Let me roll up my sleeve for this one, yeah?
She's about to bring those big guns out.
So, people that are self-employed, people that have a business, or no, actually self-employed, I'm going to start with. You have to treat your self-employed business as a business. Mm-hmm. So you have to, it's either you're going to take care of all your bookkeeping, or you're going to hire someone to do it. You either can have a bookkeeper, or you can have an accountant, or you can have either or. It doesn't matter. You just need someone that's able to track your expenses every day,
right,
or monthly,
right.
There's a lot. Yes, there's a lot of hats into a business, but why not have someone help you ease that trouble,
right?
Because you have advertising, you have marketing, you have your legal fees, you have accounting fees, you have utilities, you have rent, you have your car payments. Mm-hmm. There are so many things. You have to check your mileage. December 31st, if you have a business and you drive, please, at the end, before you shut, just make sure you just take a look at your thing, your mileage. It's very important because you can claim so many things. Mm-hmm. So why slack on that? So if you have an accountant or a bookkeeper that does QuickBooks or any program that helps you keep track of your expenses, do it as soon as possible. Right. Don't wait till the end of the year.
Yeah.
Because you're just going to be frantic and rushing. Either do it if you're going to do it at the end of the year, you're going to be paying a pretty chunk of money because it's time consuming. You probably have a date that you want things to happen, and for the love of God, don't do it right on the tax season, starting of tax season, because you probably will be pushed back.
Right.
And most important thing is, if you're making more than $30,000, you have to have an HST number.
Right.
And you either will pay yearly, pay monthly, or quarterly. So you got to make sure that stuff is on time.
Yeah.
And that's after the month of whether you're quarterly, monthly, or the year. So have someone that takes care of your finances, please.
Yes. No, honestly, it's so crazy, right? Because even my first time when I did my taxes, I just kept all my receipts in this big Ziploc bag, and tax time came and I was categorizing them, food, this, that, the other. And I'm like, God,
this is time consuming.
This is time consuming, really is.
Yes.
And at that time was, my business was nowhere close to where, in terms of growth.
Yeah,
so I can imagine when things get even more built up and you have a lot more receipts to track, or worst case, you lose things, right?
Exactly. And it depends on which business you have too.
Right.
Because let's say a real estate person will have meetings, will have bookings and stuff. So they'll be able to claim meals and entertainment because they give gifts to their clients. But then you have RNs, or no, not RNs, RMTs. Mm-hmm. They don't really have meetings, right? So, but they have uniforms that they can claim. Right. So you gotta know what your business is and what stuff you can claim and stuff.
Question: Does alcohol count as entertainment for all my drinkers out there?
Well, it's 50%, and it depends. If it's a gift, I know people that give alcohol as a gift.
Yes,
but it's 50% of that.
Okay, so you can't just go to a restaurant, order some liquor, and call that entertainment.
No, not if it's not a meeting. You can't just be like, ooh, ta-da. No. You gotta make, if you're having a meeting, ideally keep that alcohol separate.
Right.
Keep it on a separate bill. Listen, I don't want to get audited. And I don't want people to get audited.
For sure.
So when they see those things, they can go into your bank statements and check to like everything you do. So you want to just be honest. Just be honest.
Yeah. Keep it clean.
Keep it clean.
Especially when it comes to the CRA.
Exactly.
Clean is definitely the advice that we give.
Clean as a whistle.
Do you have any examples of any horror stories or anything going left when people are not prepared and they're not keeping track during the year and scrambling at the last minute? Can you think of anything that comes at the top of your head?
There is a story. Obviously, I'm not going to say their names. So there was a person. I gave them a checklist and everything. Everything's cool. They called me constantly, like, "Oh, what about this? What about this?" I'm like, listen, you're not the only person on my list, but I'll get to you.
Right.
They're rushing. I finally was able to get to them. And I was like thinking, looking, I was like, they have a child. I was like, you have a child. Don't you have like child care expenses? Yeah. I was like, so why didn't you give me that information before? And then they were complaining, they're like, oh, but so-and-so got me like this. And I'm like, but this is the information you gave me. I'm not making things up.
Right.
Whatever you provide me,
yes.
I'm doing straight from the books.
Right.
If you forget something, cool. We can go back and we can fix it. But don't get mad when you're like, oh, well, so-and-so gave me this return last year. I'm like, I'm not so-and-so, and I'm just doing it by the books.
Right.
So they were able to give me the information, and I was like, there's the information. There's the results that you're looking for. That's why.
Right.
So childcare expenses is important too.
Yes, absolutely.
And stuff. And that's why having a checklist is very important. Mm-hmm. So ideally, every year I improve on my checklist. So like if there's things I forget, I'm like, okay, next time put it on here. And if there's issues, we're just gonna keep going back and saying, hey, do you have this? And I'm very thorough. Like I'm always asking, like, do you have this? Do you have that? And also if you have your old tax return as well, especially if you're a new client, it's ideal to have that just so you can get a feel of what's happening and just be able to solve issues that could have happened before. Right. Because you can fix. You have at least, you can fix 2 to 3 years. Okay. So it's always great.
Okay, good to know.
Especially if you have CRA Online. Have CRA Online account. It just makes life easier.
Right. Absolutely.
Just to have it.
So I want to ask you, as somebody who's in the industry, as a professional, you know, you always learn behind the hidden scene secrets when you're in the industry that the general population usually doesn't have that knowledge on. Are there any insider tips that you can give any of us on anything that can benefit us to help us during tax season or taxes, period?
You can't fool the CRA. That's the one tip. There are loopholes, but it's more for like folks that are business owners. Right. They're able to figure out things. One is with capital gain taxes. Yes, you're going to be taxed on the 50% of what you've earned, but you don't get taxed if it's your personal home. Okay. So it's a good thing. Like some people are like, oh, I don't know if I want to sell my home and all that money. Don't worry. You're not getting taxed on that.
Your principal resident is good.
It's good. It's good. And I just have it like, just know the avenues that you're going to have. And when it comes to earned income, if you're comfortable with having a business, because a business is not for everyone, make sure you use the other avenues like investments, or dividends. Dividends is your best friend. It's your best friend, and it's about I'm gonna say about 15% taxed. Right. But if you save that into your RSPs, or if you save in your tax-free savings, you don't get taxed. Yeah. So utilize the RSPs and the tax-free savings, because those are the big things. And I guess the one thing is, if your employer matches your RSP contribution,
take advantage. Oh my gosh.
It's free money.
All the time.
It's free
all
money.
the time.
Who says no to free money?
Exactly.
You guys are taking Rrsp, but that's not free. So you might as well take that free money.
Yes. And this applies to even if you're making less than 50,000. That is a scenario that I would even advise, take advantage of the matching. If they're matching 3%, then put 3%.
Yeah.
If they're matching 5%, match 5%, because that is extra money at the end of the year that you wouldn't have had, that is being contributed to your retirement, which most people are not thinking about saving for.
Exactly.
Most of our population is retiring broke. You do not want to be one of those people.
And you can defer those contributions. So
exactly.
Just take the free money.
Yes, yes. But
yeah.
I want to thank you so much for being here with us today and sharing all your knowledge and all the insight in terms of taxes, because this is such an important topic for us to get familiar with.
Yes.
For those who are looking for advice, you have my contact information below this video in the description box. Please reach out to myself and I will connect you with Camille, who does amazing work. It's important for us to really get ahead of the game. Start forward thinking, start planning, start really getting comfortable with the things that are so uncomfortable in terms of our finances. I know sometimes it can get uncomfortable. I know sometimes that maybe we feel embarrassed or shame because of all of the stigma that we put upon ourselves. But just remember that we have not been taught this stuff, and it's important for us to really get educated. So let us help you elevate, reach out, and let's get this going.